What is up, guys? Welcome back to my channel. My name is David Hanlon, aka the Laptop Legend, and in this video I'm gonna be talking about some of my risk management strategies that you guys have been asking me to talk about, because again, in my previous video I talked about how that's the reason that I was able to grow my account from less than $10,000 to over $100,000 in less than 4 months. And again, the reason for that is because I manage risk so well, and I get out of a trade the moment I get spooked, because I can always get back in, but if I lose money, I'm never getting that money back. So for that reason, I'm always super sketched out. You guys probably hear this in Discord all the time. Like, I don't like that guy on the level 2. I'm getting out of this trade. Or it can't break through that wall. I'm getting out of this trade. I do that all the time. Literally, if a trade is not doing exactly what I expected from the moment that I'm in it, I get out. And it's that simple. And you guys need to start picking up that mindset, because it really helps limit your downside. And if you have any upside at all and zero downside, you're just gonna keep growing your account. So in this video today, I'm gonna show you guys some examples using TD Ameritrade's, on-demand software. Yeah, that's what it's called. And basically this allows you to go back and replay every single print on the time and sales and everything that showed up on the level 2 for stocks up to like a couple months in the past, which is so helpful because you can go replay live data from the market and figure out how you would have reacted, how you should have reacted, why stocks did what they did. So incredibly helpful. So I'm gonna use that tool today and show you some of the stocks that had some things on their level 2 that allowed me to make some decisions. And hopefully me doing this will allow you guys to start to recognize things within the charts, recognize big sellers on the level 2, and get out of trades when they're about to go against you. Because if you sell right before everyone panics, you get a nice clean execution. But if you sell right as everyone else is selling, you're gonna lose a ton of your value, and you might take a $500 loss instead of getting out break even. A couple seconds can make a huge difference. So hopefully this video helps you guys. Jesus, I had a little, guess I'm still going through puberty or something. Hopefully this video helps you guys. If it does, please smash that like button and subscribe, because I try to put out helpful content like this. If there's any more videos like this that I can make for you guys that'd be helpful, please, drop video ideas down in the comments, and yeah, let's dive right into it. All right, guys, so I'm here at my laptop, and again, this is the Thinkorswim trading software by TD Ameritrade, and it has this beautiful feature on demand, which again allows you to replay any data. So you click on this, you choose the calendar date, you choose the time, and this is gonna be whatever time zone you're in, not the market time zone. So keep that in mind. Also, it's the 24-hour clock. So I tried putting in 2:45, and that was 2:45 a.m. So obviously no data comes in then. So just keep that in mind. If you want to do in the afternoon, it has to be 12 plus whatever. If it's 1 p.m., it's gonna be 13, etc. So just keep that in mind. And here you can see I have this right in the middle of the day, and I just wanted to show you guys what this looks like. Now, this is actually what I use currently for my level 2, because again, as a reminder, I trade on Fidelity Active Trader Pro because I prefer that platform. I prefer the fact that it has 0 commissions for OTCs, but they don't have level 2 for OTCs. And OTCs, level 2 is probably more helpful than it is on NASDAQ. Probably a lot more helpful because the price action is cleaner to read, and there's less busyness, less overall volume. So because of that, level 2 is especially helpful on OTC stocks. And it's a tool that you need to have in your tool belt. So if you trade on Fidelity, I recommend making a TD Ameritrade account. I think you have to deposit $500 to get free live data. It's free because you don't have to pay for it, but you have to deposit the money. Anyways, I just want to show you guys what I saw on SIRC, just so you can get kind of an idea of the types of things that would spook me if I'm about to take a trade. And basically, I just want to walk you guys through this. So I'm going to start playing the data. You can see, I think you can see, you should be able to see. All right, so it's playing now. I think I'm gonna speed it up. So so now it's 3x speed, and you should be able to see these coming in. So again, this is the time and sales, and these are the prints. So this is anything that actually comes through, and you can see the level 2 here. And this looks pretty normal for a stock that's, in this price range. We can see here the bidders, and again, people are looking to buy. Let me pause it real quick just to explain. If you don't know what level 2 is, it's super helpful to learn how to read. Level 2 is every single buyer and every single price that they're like willing to buy at. So you can see here, someone's willing to buy 1,800 shares at 168, and that's all the price is. There's a buyer here and a seller here. People buy on the sellers or sell on the buyers, and whichever one breaks, then it moves the price down or moves the price up. So you can see here again, there's 1,800 buyers on this one, 168, 100 buyers here, and then there's 5,850 sellers here, and another 1,777 sellers here. So just to get an idea, it seems like there's more sellers. But you also have to look at the time and sales, because there could be more sellers, but if it's all green prints on the time and sales means that people are buying directly off the ask. So imagine you're stuck between two walls. If there's green prints on the time and sales, there's a ton of people trying to bust above the ceiling. They're trying to break above that wall. And typically, if you see a ton of green prints, it means it's going to move up. Now, if you see a ton of green prints and it doesn't move up, that's typically a pretty bad sign because people were buying expecting it to go up, and if it keeps not going up, they're going to get spooked. So everyone who just bought in is going to sell, and it's going to create a panic. So these are just little things that you need to start picking up on. But let me play this again for you guys. Back at 3x speed. And again, none of these sellers are like enormous, you know? In the price range you're in, none of these are like super big size. 20,000, I mean, that's kind of big, but I mean, what is that? Not even a $40,000 position. So I mean, it's big, but it's not huge. You know, nothing too massive. It's kind of battling back and forth. And I mean, there's nothing too telling here until this pops up. We see a 200,000 share seller pop up on the level 2. And again, you do the math, I mean, that is over a $300,000 sell order. So I don't even have the money in my account. If I used every dollar in my account, I could not break through that seller. And typically when you see a seller that big, especially at a stock this high price, it's a little spooky, you know? It causes a little bit of a sell-off. So I didn't want to buy this into close because I saw this seller here and I'm thinking, man, this is probably going to spook some people. And again, now you can see there's a lot of people slapping the bid. There's people selling right on the bid because there's a buyer there. They're like, shoot, I don't want to fight this 200,000 seller. If he's selling that many, that's probably a bad sign. So you can see, I mean, it downticks a good amount. It downticks a good amount. And, you know, some support comes in, but people get spooked by this. They were slapping away at the bid at 166 and it moved all the way down to 163. Now the bid's at 162. It broke through it. Now there's sellers at 163. Now it's hitting 162. That massive seller, he scared people out. So the second I'm in a trade and I see something like this pop up on the level 2, I get out immediately. Because if you have, you know, 10,000 shares, each penny matters a lot. Each penny matters a lot. Each penny is $100. So if you're in from 166, hoping to have it break above these highs here, you know, 170, break above that, and you see this guy come in, you can get out immediately. And then if you see it find a bottom, okay, you know, buy back in if it starts turning at 162. But I just don't trust it. And it was never able to break above this seller here. You can see now it's printing there again. Now it's printing there again. And it's trying. But it's never able to break above this 200,000 seller. So it's always better to wait until you see these things disappear before trying to get back in. You know, say you saw him here, and then there were people buying. You saw a bunch of 168 green prints. That means there's a ton of people buying at 168. You see the size diminishing. It goes from 200,000, 170,000, 150, 140, 100, 80,000, 70,000, 60,000, 50,000. Okay, then I would probably try to place a buy order because people will see that like, oh, it's about to break through this wall. And you see now, they moved down half of their shares to 165 at 100,000. That's still a big position, $165,000 position. That's still a lot. They moved down their shares. They moved down their big wall that's hard to break. That's a bad sign. That's a bad sign. So when I look and I see price action like this on the level 2, it's scary. And I don't want to buy. I don't want to buy. So just keep that in mind, guys. If you start to recognize stuff like this, you can avoid those losses by getting out quickly. This is the type of thing that would spook me and did spook me. This is why I didn't buy the stock. So this is just one example of learning to read the tapes, learning to read the level 2s. And having this at your disposal will be so incredibly helpful. So incredibly helpful. Now, let me see if I can find the other example. EKCS. And what time was that at? That was sometime in the afternoon. I'm trying to see if I can find exactly when it was. It might have been right in here. Yeah, call that 1332. Call it 1332. 1332. So you can see on the level 2 here, look at this. This is the type of stock where I would probably be a little bit more aggressive if there's upward momentum. Because I know that if this gets a lot of buyers, this is going to pop up really, really quickly. And the reason for that is, look at this level 2 here, guys. You see 5,000 at 39. You see a decent number at 40. You see some at 40.5. You see some at 42. And then the next one is 50. The next one is 69. That means there's a huge gap in the level 2. And you know, typically, when it gets to that price, say the price gets to 43, someone's gonna step in, someone's gonna start selling there. But the fact that there's not big sellers already on the ask there means it's a lot more likely to skip up quickly. And if there's a rush of buyers, that means you can get in and, you know, potentially break one of these walls. So say it gets to like 42. I think this might have been the actual trade. Okay, maybe I bought it 40. I may have bought it 40. Yeah, so I made $1,000 on this one. I bought it at 40 and I ended up selling it at like 46. I ended up selling it at 46. And again, how did I know to do that? Because there's a gap in the level 2. So again, if you look at this, you can see if you take out this guy at 42, the next seller is at 50 cents. So if you can buy on the ask at 42 and then sell just under that 50 seller, you can sell at $49.99, you're instantly making, what is that? I can't even do that in my head. Almost 8 cents a share? That's insane. You got 10,000 shares? That's $800 like that. That is what I look for. And you know, again, obviously people are going to step in between there, but there's not going to be many. There's not going to be many. So you can see, I'm not even sure which one I am. Let's see if it's going. See if it keeps going. Is it playing? Yeah, it's playing. All right, it's playing. Just to give you an idea. That's what I look for, guys. This is just another one of those things that you'll learn to see. And this can also help you on the defensive end if it's going down or if it shows weakness and you see that there's like, maybe there's a bid here. Say there's a bid at 39, but then it just goes down to straight to 26. That's a bad sign. That is a bad sign if you're trying to be defensive. And the reason for that is if someone whacks that bid and takes out the buyer at, you know, say they take out the buyer here at 40, the next buyer's at 26. So if you try to cut market after it breaks 40, you might sell at 26. That would be horrible. So seeing that it's like this on the defensive end is also very important. It's also very important. So if you get sketched out, you need to be especially careful on stocks like this that have a big spread. And again, the spread is the difference between the bid and the ask, the best buyer and the best seller. So keep that in mind, guys. Keep that in mind. This is just, I mean, it's so helpful to know this stuff. Again, you can see it goes from 44 to 49. It like instantly ticks up on barely any volume. And because people will buy, man, it just moves right up. I mean, that's crazy. It does not take any volume to move this up. Again, this thing was just at 40. You buy 10,000 shares at 40, you sell 46, you sell 48. That's crazy, bro. $600 like that. And that's why I take my profits on stocks like this. You got to take them quickly. Because, man, when it starts to come back down, it takes out a few of those buyers and then suddenly it drops 10, 15 cents. So you got to be really, really careful. So learn to read the level 2s, guys. Learn to read the level 2 in combination with the time and sales, in combination with the chart overall. It's very helpful. And again, this line that I have here is VWAP. I wish Fidelity had VWAP on their charts. They only have it in the watch list, so you can't see the line. You can only see just a number on the watch list. But it's still helpful to have. And a lot of times, you know, this is where stocks will bounce off of. Not always, but you know, it's typically an area that traders look for. If stocks are below VWAP, sellers are typically in control. If stocks are above VWAP, buyers are typically in control. So just keep that in mind. And yeah, guys, I mean, that's pretty much the lesson from this stock. Again, when you see super, super light level 2s like this, you know that it has the potential to skip up really quickly. And if you buy on the ask, take out that seller, and then sell directly below the next ask, you can make really nice money like that. So I love plays like this. These are just some of the things that you'll start to recognize. And man, just learn to read these level 2s. It's really helpful, guys. It's really helpful. Also, one more thing. I don't have a great example of this one right now. Maybe I can record some if it happens, try to record my trades and see if it happens. But basically, another thing you want to look for is those reserve orders. And it could be a Knight. It's typically Knight or Citadel. And you'll learn to recognize these market makers. Knight used to be one of the biggest market makers. I think they have less of a monopoly now, but they still route a ton of orders. They typically do reserve orders. So if you see a tiny share size on the level 2 that's absorbing a ton of volume. So say it says, 1,000 here, or maybe 5,000. They do that typically. Citadel does that a lot. Knight does that a lot. They naked short, and I mean, it's not always naked shorting. It could just be, you know, shorting, or it could be selling shares that they already have because they have a lot of inventory. But basically what they do is it's a reserve order, which means they do not show their true size. So remember that 200,000 share seller? That is designed so that we see there's a 200,000 share seller. And that, you know, that spooks people. But if they just want to absorb as many shares as they want, they can have a 1 million share sell order at 40 cents, but they only show 5,000 on the ask. So you might see 5,000 on the ask, and on the time and sales, it's printing, you know, 50,000 someone just bought, 100,000 someone just bought, 50,000, 20,000, 10,000, 50,000, 50,000, all green, all printed on the ask, but it's not going anywhere. And you're like, what is going on? Well, what's going on is the market maker has a reserve order. They're selling who knows how many shares. And when I buy in something and I see that it cannot break through that wall because that market maker is selling who knows how many shares on a reserve order, that sketches me out. And if it hovers there too long and can't break out past that, especially on a dip buy, I'm like, all right, not worth it. Not worth the risk for me. Because what happens is if it tanks and tries to bounce, but there's a wall that it cannot break through, it will just fail below and typically break below the low from where the bounce bounced before, which is really scary. And again, if all these people dip bought thinking it's going to bounce and then it starts panicking more, everyone is going to be selling as soon as it breaks below. And you're going to have a horrible time getting executed. Those are the type of situations where you market sell and you can't get out for like 3 minutes, 4 minutes, 5 minutes. But if you can recognize that beforehand, it bounces, but it can't break through that wall because Citadel, CDEL, that's their market maker ID, or Knight, is sitting on the ask with a reserve order and it can't break through that, and you get out immediately before it downticks, say it's at $39.99 and 40, you can sell at $39.99 before the momentum shifts and it comes back down, and then you get out at like 35 or 30 on a big panic. So just keep that in mind. These are just little tips, guys, that if you start to pick up on this stuff, it's going to make such a difference in your trading. It's going to make such a difference because you're going to be able to cut those losses quickly, or even, you know, potentially take small gains before they turn into a loss. Say it bounced off of 38. You bought in at 39 and now it can't break through 40, even though it's printing 500,000 shares on the time and sales, and it's only showing 5,000 on the level 2. That means there's a reserve seller. If it cannot break through that reserve seller, it's typically a very bad sign. Everyone who dip bought is going to panic, and it's going to make it tank even more. So start to pick up on these things, guys. Again, it's going to make such a big difference. Hopefully this video helped you. If it did, please smash that like button. Also, if you made it to the end and you did not know yet already, that song at the end is my song. My goal in life is to be a Spanish singer, believe it or not. I know it sounds crazy, but that's my goal in life. So if you want to check me out, it's Gringo Parcero, if I say it in an American accent. So feel free to check that out. I'm on iTunes, I'm on Spotify, I'm on YouTube, SoundCloud, all of it. So check it out. That song at the end is Te Mientes. I also have another one that I like better, Si No Es Así. So check them out. They're pretty good. Share them with your friends if you want to support. I'd appreciate it. And yeah, that's it for this video, guys. I'll see you in the next one. Until then, you know the drill. Let's grow better together. Preguntar, bebé, dime por qué te mientes. No puedes esconder todo lo que tú por mí sientes. Parece que miedo mantienes de que alguien vuelva a romperte el corazón.